covering the community, the people, events, and issues of Georgia, Carolina. This is the Means Report. Now, from the studios of WJBF News Channel 6 in Television Park in downtown Augusta, here's Brad Means.
Hello everybody, Happy New Year to you and welcome to the Means Report. Hope you are wrapping up a wonderful weekend. We appreciate you pausing long enough for 30 minutes to be with us on the Means Report. Always a joy to be here, and especially now as we kick off yet another year with our first brand new episode of 2011. And we remind you to pay attention throughout the year to our topics and to our guests, and if you would like to tweak the way the broadcast looks or submit your own ideas as to topics you'd like to see covered in the future, the Means Report is always open to that. And in just a bit we'll let you know how to get in touch with us and how to make sure your topic gets covered. But first, we want to start the new year off with helpful advice, which is really what we're all about here at TMR, trying to get you off on the right foot, especially when it comes to your finances. There have been some changes for 2011. We want to take a look at the tax laws in just a bit with Abram Serrato with Serrato, Maddox, Evans & Company, certified public accountants here in Augusta. Abram is our resident expert on taxes, tax laws, and all things accounting. He'll be here in just a bit to talk about that. But first, where to put your money and what to do with it in the months ahead. Jeff Fehrman is in charge of the Fehrman Investment Group. He's always kind enough to be here on the Means Report to help us navigate those sometimes uncertain waters of the world of finance. And we're happy to have him back for 2011 as well. Jeff, thank you so much for being here, and Happy New Year to you.
Happy New Year to you. I'm glad to be back and past the snow and ice. It's just good to be out and about. You know, I got stir crazy.
We were talking about that, just to be here safe and sound in the studio.
Absolutely.
Something that seemed impossible 3 days ago.
Did seem impossible. That's exactly right.
All right, let's talk about, we always talk about the positives and negatives of the economy and of investing when you're here. Let's start with the negative. Do you see any risks for 2011? And I know it's early, but risks that jump out at you right now?
Yeah, I think the things that jump out right now, gridlock in Washington, which is what we saw in the past.
Yep.
I think we've gotten past that. Hopefully we saw that in fall. State and municipalities are really struggling with their budgets, so that's a risk. Commodity inflation, where oil and all the other commodities go up significantly. And then finally, a risk that we're keeping an eye on is the housing market, significant decreases in housing prices. Most of these we think are small risks, but they are out there, and you need to kind of maintain watch on them and be vigilant.
Well, let's take a look quickly while we're talking about the real estate market. If you are, and I think I always try to break this down to the individual, trying to sell your home. In 2011, from what I'm hearing, you might not expect that much different than you got in 2010.
I think you're exactly right. The real estate market seems to have flattened out, especially locally, but you better allocate some time to do it, and I think you need to have your house in good selling shape to do that. I'm not a real estate expert, but you need to talk to your real estate experts if you're trying to sell your house.
Well, we have had realtors on here, Jeff, and they say the exact same thing you do. The very least you can do is have it sale ready, and hope for the best in this time. All right, let's take a look at the positives. What do you see on the financial front in that department, and everybody's favorite or least favorite topic, unemployment? Your thoughts on that?
Yeah, you're right. Usually this is a favorite conversation. It hasn't been a fun one the last couple of years. Unemployment numbers, we believe we're going to see a good trend. The good thing about this new year is unemployment has actually ticked down in the holiday season. We think that trend is going to continue. The recent tax changes that Abram's going to cover for us are helping. We think the payroll tax deduction is going to help. So the tax parameters are going to help. The direction we're headed in will help. But we still think you're going to be 8.5%, 9% even at the end of 2011.
So the unemployed person watching the Means Report today should have slightly higher hopes that he or she's going to find a job?
I do think so. I think that things are looking up a bit.
What about economic growth overall in 2011? What's it going to do?
I think we're going to see more of the same, this slow and steady growth. You know, that's good that we're moving in the right direction, as opposed to a couple years ago we were going in the wrong direction. We do think it'll actually pick up to kind of that average of 3% gross domestic product, kind of the overall economy. So that's good news. If there's some bad news about that is we really need a more robust growth to shed that unemployment number quicker, Brad.
Do you see that happening anytime in the near future? Can we hold out hope?
I think it's going to be some time before we see really significant growth. I think it's going to be slow and steady.
Well, that's what I'm hearing too from you and from others, is that even though we always want quick solutions, quick resolutions, that might not be the case.
Took us a lot of time to roll up all this debt, and it's going to take a lot of time to roll it back, I think. And that's what we're seeing as the unwinding of debt and getting to where we want to go.
All right, so speaking of debt and the nation's deficit that seems to be ever growing, the economic policies that we're seeing coming out of Washington, what do you see as far as inflation and what we can look for with that?
Yeah, I think everybody ties inflation and the deficit together really closely. And what we're seeing right now is some talk in Washington of reducing deficits, which is a positive. We actually think in the short term, the next 2011 time frame, inflation isn't a problem because we have a lot of excess capacity in the world that we're living in due to that unemployment number. So we think that's a positive. Longer term, we do need to get some deficit reduction. We need to ratchet back some of the fiscal and monetary stimulus that we've had. But this year, we actually think inflation is going to be intact and not be a big problem.
Do you think we're going to have significantly higher interest rates this year?
Yeah, all your CD buyers want to know that one, don't they?
Yeah.
The good news is if you're buying a house that you just touched on, we don't think mortgage rates drastically increase. We do think rates will start to continue to ratchet upwards, albeit fairly slowly, but the direction is going to be upward versus downward, which we've seen the last couple years.
Jeff, you've been on this broadcast before, and we've talked about whether banks are loaning money, and there was a time during our darkest hour where it was tough to get a loan, whether it was for a house, a business loan, or anything else. Do you see banks loosening up there? Is it easier?
I think easier is relative. Interest rates are good. I think that the ability to get a loan has ratcheted back to where it should have been. If you have good credit, you have good down payments. I don't know if easy is the right word. It takes some time and patience, I guess. But yeah, I think the banks want to lend money, but it's not an easy process for sure.
What do you see when it comes to gold and oil prices? And as you answer that question, I remember at least during much of 2010, you couldn't turn on the radio without hearing a commercial encouraging you to buy gold.
You're correct.
What's going on with both of those?
I have concerns, and really this is tale of two different commodities, really. Gold prices in particular are going to continue to ratchet up probably short term, but I believe it's really speculation is the problem there, is there's not a fundamental demand for gold and people using more gold or buying more jewelry. It's just pure speculation, which also means if we get some confidence in the economy, we could see a pretty good drop in gold prices. Oil is quite the opposite. Oil is really demand driven. That demand is going to go up, not down. So I believe in 2011, going into 2012, gas and of course oil closely tied together, we're going to see higher prices for both of those.
Some people are saying $5 a gallon at the pump. Is that something that you'd agree with?
I don't know about $5, but I think we could see $3.50, $4.
I think it's going to creep up there again.
I do too.
I believe it's already kind of a sticker shock at the pump when you fill up, and so that's going back, and it's because the demand is out there for it, right? If we all stopped using it, it would go down, I guess. Start using electric cars, etc.
And that's a hard shift to make quickly, as you talked about, and it is kind of the double-edged sword. One of the reasons gas prices are going up is because the economy is getting a little better, so people are traveling and doing more things. So.
What about your stock market crystal ball for the new year? And I know that that's a tough area to predict, but what do you see happening on Wall Street?
Yeah, I think for all the reasons we just talked about, getting the crystal ball out, I think we'll see 2011 a lot like 2010. Cash and bonds are going to underperform the stock market. Of course, that's, stocks are much more risky than the bond market, but I think you're going to see a stock market that might potentially have, high single-digit, low double-digit growth. We're poised for that slow and steady.
For the working man or woman, where should our money be? 401k, keep it simple?
I think, 401k, and the big reason is, number one is make sure you're getting the match.
Right.
Your employer, it's free money. Your employer is winning the lottery every paycheck. If you're not taking advantage of your match, you're crazy. Absolutely.
If you're not in a job with a 401k, if you're a part-timer, how can you save money, and where should you put it if you have extra?
Yeah, it depends a lot on what your short-term needs are, if you got that short-term cash build-up, but I think the IRA may be a good avenue if you're young, Roth IRA. So it really depends. That one's harder to answer without knowing a full picture, but planning for retirement and college is certainly part of the picture.
Have you ever seen somebody come through your office at Fehrman Investment Group where you tell them just to do something as basic as set up a savings account? There's still some value in that, isn't there?
Absolutely. For the client that hasn't done the core fundamentals of your insurance and your savings account, that we're going to start at the basics and build from there off your foundation. Absolutely.
Jeff, it is always exciting, and I'm always somewhat anxious when you come in for your quarterly updates.
I hope that's good anxiety.
It is good anxiety, but I'm always hoping for just this perfect picture but you keep it real, and
Right.
you weren't all gloom and doom this time. There's some bright spots out
I think
there.
there's some bright future out there, and it's, you know, slow and steady wins the race, and better news than we had a couple years ago, no doubt.
Well, you're right. Better news than we had a couple of years ago, and as you pointed out a minute ago, we didn't jump into this thing overnight, so we're climbing out.
That's it. You got it.
Well, we appreciate you as always.
Thanks for having me.
Yes, sir. Anytime, Jeff. We appreciate your visits. Jeff's website is on your television screen right now, the Fehrman Investment Group website, which is fehrmaninvestmentgroup.com. Please visit it. You can follow up with Jeff and his crew on topics we've discussed on the Means Report, and I know, Jeff, you encourage those questions from our viewers.
Love to educate the public, Brad.
All right, thank you very much,
Thank you.
Jeff Fehrman. We're going to keep our financial theme going, folks, hoping to help you out in this new year. In a moment, Abram Serrata, Maddox Evans & Company, CPAs. Mr. Serrata is going to be here to talk about the new tax laws and how they will impact you. Watch us before you file.